Hi, it is Tuesday, January 3rd, 2:25 a.m. Chicago time, and I'm John Kosar, Chief Market Strategist for Asbury Research in Chicago, Illinois. I'm here today to give you a preview of our Keys to This Week report for the U.S. stock market. This one is for the week of January 3rd, and in Keys to the Week, which comes out every Monday or every whatever the beginning of the week is, and it lists the 10 most important and potentially market-moving charts and data series for the upcoming week, according to the research we do. It includes our near and intermediate term market outlook as well as key buy and sell levels. It's a large report. It's available via our own website at asburyresearch.com or through the Interactive Brokers platform. If you can't find it on the platform and it's actually purchasable right from IB, you can contact your IB rep or you can contact us at asburyresearch.com and we will help you to get that done. So let's scroll through the report, because what we're going to do today is, rather than go through the entire report, I'm going to hit on 2 of our 10 keys to this week. We're going to look at some charts pertaining to them and kind of get a little better idea of what we look at here and how we make determinations as to whether the markets are headed higher or lower. So we're going to scroll past our conclusion, investment implications and strategy portion through our matrix, in which we take our 10 keys to this week and we organize them into near and intermediate term positive and negative categories through our 10 keys, which are all listed in the order of importance with a little paragraph on each. But let's get to the charts. The first chart that I wanted to talk about today that I think is important has to do with seasonality. Seasonality is important at certain times of the year. I should say seasonality is more important at certain times of the year than it is at other times. This is one of the times that's really important. There's usually a strong fourth quarter seasonality that leads into what I'd call a pretty interesting first quarter. This is our chart here, and it shows the weekly seasonal pattern for the first quarter in the S&P 500 based on data from 1957. And what this shows is that the first week of January is the strongest of the entire first quarter. It leads into a couple of weak weeks in the second and third weeks of Jan, and then the weakest week of the entire first quarter is in the latter part of February. So we typically get a strong week coming out of the Christmas break, and then things start to deteriorate from there. So that's what we're looking for now. We're looking for weakness, and if you've been tracking us through our videos with Interactive Brokers, you know that we've been looking at things like put-call ratios and volatility, showing a very complacent marketplace that looks like it's in a position to be frightened. So let's look at one more chart here for today. Now that we know the market seasonally is prone to have a good week and then things start to fall apart from there. How do you tell when things fall apart? Well, there's a number of ways to do that, but one way that we do that is via the total net assets invested in key ETFs like spiders, which emulate the S&P 500, which we have here in the upper panel, like the Qs, like IWM, which emulates the Russell 2000, like the diamonds, DIA, which tracks the Dow 30. Let's talk about the spiders right now in SPX, which is the cash S&P. Down here, this is the daily total net assets invested in the spider, which again tracks the cash S&P 500. Note that on November 8th, these assets expanded up against their 21-day, expanded over their 21-day moving average. Why a 21-day? Because this is a tactical tool for us. Asbury Research's strategic 1 quarter out, tactical within 30 days. So when we're trying to be tactical, we're looking at a tactical tool. We're putting a 21-day moving average over it because there's 21 business days in a month. So what we have here is a rise on the 8th of November, which was right before the vote, right before the election. You saw some expansion. You saw some money coming into the spiders. This was people betting on Maybe they were betting on Hillary winning. Maybe they were betting on Trump. I don't know. But they were betting on the S&P going higher after the election, and they were right. And you see that these assets have stayed up above the 21-day this whole time. Actually, they came down to test it at the end of November. That was this little dip that if you bought it, you're looking pretty good right now because those assets have stayed in the monthly trend of expansion, which is what we're looking at here. Note where we are now. We've stopped going up as of mid last month, maybe December 13th or 14th. So we're drifting sideways now, but we're still up above the 21-day moving average, but it's coming up to meet the data. So if we continue to expand assets here, we're going higher. If we should cross downward here and break this 21-day moving average, just like we did here back in August, this is likely to lead into some kind of a pullback, which is what the seasonality warns of. So again, these are just a couple of indicators that we use. We probably look at 100 indicators. A lot of this is done over the weekend when the markets close, but this is part of how we come up with ideas to help make our subscribers money. Again, the entire Keys to This Week report is available either on our website at asburyresearch.com or through the Interactive Brokers trading platform. Interested investors can receive a sample report either on the IB platform or by contacting us directly at asburyresearch.com. You could do that through the website or by calling 888-960-0005. Happy New Year and have a very profitable week.